Hello, investors and traders, and welcome to the midweek report. I'm 𝐊𝐤𝐬𝐤𝐸, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and we're coming into the final minutes of today's trading session on this Wednesday, January 8th. Remember, every Wednesday from 6 to 7 p.m., we have our rapid fire stock analysis session. And we are continuing with that 15-day free membership into 2025. So if you're interested in coming on board and more or less being a fly on the wall, you can participate in this rapid fire stock analysis session where we have our members submit ticker symbols to me and I analyze those charts in rapid fire succession. Now, the last time we did this was on December 27th, and you can see we have the first name of each of our members who submitted a ticker symbol last time, and the price targets are off to the right here. Now, the green colored cell signifies that those targets have already hit since December 27th, and obviously the ones that are not colored in yet have these arrows denoting the upside target here in CCI. FNGD, submitted by Leon, still has a downside target. And you can see that in that short period of time, we had a good number of these targets already hit. In fact, 60% of the 50 stocks that I analyzed in that hour have already hit. So my goal is to go over at least 50 to 60 stocks in the hour. And we have a very high hit rate. In fact, we're averaging over 82% target hit rate, which is the best in the world. So again, if you want to learn how to do this on your own, just plug right in and we will absolutely help you out with that. So let's get back to the charts. We have DIA showing a bullish harami here that is doubling up as a hammer. Now, I still have an upside target that came very close to hitting last week, and that is 431.37. I think we could still hit that, but keep an eye on that moving average because it will most likely act as a resistance point, a role reversal resistance at that. If we look at what's happening on the moving averages, let me just throw this out there while we still have time before the market closes. The 20-period moving average, which is that blue line, has now crossed below the 50-day moving average, which is the green line. And when we have these moving averages crossing like that, that generally signals that the beginning of the next downtrend is happening. So I think we're at the beginning of a bear market. That's with DIA. If you look at IWM, it's going to look very similar. You see the 20-period moving average crossing below the 50. And if I hop ahead to SPY, you're going to see that we are about to cross that 20 below the 50, which is only going to add more downside pressure to the general market. So keep that in mind, especially those who are long. Now with Bitcoin, look what's happening. I mentioned that last week. We're now significantly closed below that 20-period moving average. And if you look at the monthly chart on Bitcoin, you could see that we had a shooting star last month and we're forming another shooting star. Very rarely do you get back-to-back shooting stars, and what that is, and the shooting star that is a bearish candle that shows a shadow or a vertical line above the body of that candle that's at least 2.5 to possibly 3 times the length of the body. So keep an eye on the downside for you Bitcoin traders. We're making money on the Bitcoin market because we have a short position in MSTR. I'll just throw this out there as a freebie. MSTR is showing a massive pivot forming right here, and we have a negative delta spread on, a bearish spread that's doing extremely well. In fact, it's one of our best positions. So again, if you want to come over to Sticky Trades and get some trade notifications from us, absolutely fine, you can do that, or you could just listen to the recordings and learn. Just come to StickyTrades.com. The link to the free membership will be in the description box below. So again, no obligation, no credit card, none of that is needed. Just come on in. So again, I think we're going to move a little bit higher on Friday. Remember, tomorrow is Thursday. The markets are closed in memory of Jimmy Carter's memorial service. So the markets will not be traded, but we will be open again on Friday and into next week, which is expiration week. Now, looking at IWM, here as we come into the final 20 seconds, we are already very close to this upside target from Monday here, and we have a hammer. So I think we're going to move back up by Friday, and then I think we're going to start looking more seriously to the downside. So again, you bears are going to be very happy. And there it is. The markets are officially closed again on this Wednesday, January 8th. Moving on to 𝐞𝐞𝐞, you can see that we have another bullish candle. Now, my lines are going to pop up here. There we are. We already hit my upside target on the Qs. And remember, if you're brand new to these videos, these diagonal lines here, up and down, are previous price targets. So you can see the accuracy in how we put these reports out. And next week, again, I do believe we're going to see lower prices. So when I draw that diagonal line to the downside, you could follow along with these videos and track the progress. In fact, when I make the announcement of what that price target is going to be, like in this case, I think we're going to go back up to at least test that moving average of around 522. You could mark that on your own chart and track it with us. Again, to help you build confidence in these charts, because it's the charts that we use to get that 82% accuracy over time. And that's what I try to teach the general public, is how to read the charts in a very simple way using our 7-point trading checklist. The 7-point trading checklist is very simple. Once you learn what to look for, you just go and put the checks next to each box, and you make the call as to who's controlling the market. It's only going to be the buyers or the sellers. So in other words, if I see a bullish candle like we see here in the form of a hammer on lower volume on the way down, that's more bullish than bearish, right? And then you go down and look at the oscillators to see what they're telling us. Now the CCI has not yet pivoted up, but I think by Friday you start to see that pivot higher. And then, like I said last Friday, in the weekly market report, once we get that pivot, which we already have, we now have lower highs showing, which will most likely be followed by, guess what, lower lows. So that's pretty much where I'm going to be going next week. And on Friday, I'll draw that line out for you to help you with setting that price target. Now, again, going to SPY, we already looked at that moving average crossing over, but look what's happening here. The moving average is now acting as resistance. We already hit that upside target from last week at 597.99. I think we're going to go back up to test the moving average. I draw my diagonal lines on Friday, but I'll talk you through what I think will happen between now and Friday. So make sure you hit that notification bell and hit the like button, your comment, subscribe, do all those great things. And you will be notified when the next video comes out. So again, you could get your free lesson on how to read the charts, and you won't have to take too much time trying to find it. Once you click the notification bell, a text message comes right to your phone, and then you click on it and you watch the video. It's really that simple. So again, please click that subscribe, like, and notification bell, and you'll be right on track to helping yourself out read these charts. So again, I think a little bit to the upside by Friday, and then we'll start to turn lower. Again, looking at the VIX, well, we are pivoting higher. We are pivoting higher, but look at that long shadow on top. We're kind of struggling with this short-term resistance area right here around 19. I think we're going to go back down by Friday on the VIX, but I don't think we're going to collapse the VIX. Remember, the VIX is inversely related to S&P. So if I'm telling you I think the VIX could come down a little bit, that means that the S&P will most likely go up a little bit. And I just said that we could go up to test that 20-period moving average. Folks, I have a great time putting these videos together. I can only hope that you like them as much as I like presenting. And if you stick with us, I promise you there's no pressure, sales, none of that. My mission, I feel, in my career is to help people learn how to read the charts to put the odds in your favor. We're making really good money in this market. I can't guarantee you that you will as well, but over time, what I can guarantee you is the time that you invest in learning these concepts is time well invested. Again, all you have to do is come over to Sticky Trades. We have StickyTrades.com University. You can enroll in our option courses. You could learn from the basic levels, intermediate levels, and go right up to the advanced levels at your own pace. We know a lot of people still have regular jobs or they're running their businesses. So when you come over to us, we help you take that in stride in a nice pace that's not going to be overwhelming you in any way. So that is it. I'll talk to you on Friday for the weekly market report. You have a good rest of the week, and we'll talk to you then. So long.